Good morning. My name is Piotr, and it's gonna be my pleasure to spend the day with you today. It's a second part. Previous Tuesday, we had an introduction to the basic supply and demand. We had technical issues over the course of the day during the previous meeting. Hopefully everything is gonna be okay today. Let's start with the risk warning, guys. Please bear in mind, trading FX on margin, trading crypto on margin carries a high level of risk, may not be suitable for all investors. You can sustain a loss of some or all initial investments. So please do not invest the money that you cannot afford to lose. Seek education, gain experience before risking real money. However, past performance doesn't guarantee future results. All right, we are done with risk warning. So we can slowly start to summarize what we discussed last time, right? It's gonna be I will try to make it fast. In case you have the questions into the particular things we are going to discuss, please feel free to ask them during the presentation. If you have some additional questions related to FX market but not related to the supply and demand, please wait for a break, and over the course of the break I'm going to try to answer them as well. All right, so first thing first, you might wonder, because there are plenty of different colors on my chart. So quickly, whatever you see, doesn't matter the time frame. The red color, either so the red color is related to the monthly chart. Then we have blue color, right? So whatever is a box is a trend line, whatever is, but if it's a blue, it's related to the weekly chart. And for example, here on euro dollar, as you can see, we have big blue box, and it's what we discussed already during our meetings on the YouTube. It's a possible demand zone based on what we've seen to May 2017, right? So it's a blue color. It's a weekly chart. So even if I'm going to switch to 1 hour chart, okay, and if we are going to one day approach this blue box, I'm going to have the idea, all right, from the higher time frame, we are approaching significant level, significant zone. So in that case, it's a possible demand based on the weekly, right? Okay, then we have green color. Then we have a green color, and green color represents what is going on the daily, in my case, right? Then we have Yellow, we do have orange, both represents what is going on from the intraday perspective, all right? So there is two more things I have on my chart. As you can see, blue dotted line always represents weekly open, current week open on my chart, all right? And I have a green dotted lines, and they represent Monday high, Monday low. So that's it in terms of what the different colors means on my charts. Okay, so hopefully that's perfectly clear. I'm trying to have it like this, that on the daily, I'm trying to hide the levels related to the intraday chart, right? To try to have them much more clear, all right? So that's how I see the charts from the colors perspective, right? Okay, now, previous meeting, we were discussing possible supply, possible demand, right? Why possible? Because as long as we cannot move the market, me, you, we can just guess that, okay, this zone, these levels, they may work as a supply, these and those may work as a demand, all right? We can guess based on what we see on the charts only. So if someone is going to ask about the accuracy, supply, demand, are they work 100% of the time? Of course not. Of course not. And last time I've mentioned that if you are going to try to trade each supply, each demand, probably it's not gonna work your way, okay? So we are going to go through the basic stuff we discussed last week, and then we start to focus on the approach, how to try to avoid some bad trades. We are going to talk about manipulation, and I'm going to add a few hopefully useful tricks for you. All right, so let's start with the first setup. And the first one is a Riley, right? Then the base creation when markets have few minutes to make the breath, and the markets decide to go lower. So we have Riley, all right? Then we have some kind of the base creation, right? And then significant drop, all right? Now, what is key takeaway from here? Because we don't have to do anything during that process. We have to try to find such a setup. What is the takeaway here? The drop, right, has to take out the previous demand zone, right? So we have to break below the latest demand. That's the base of this setup, right? Riley, some kind of the base drop and the push lower, and we have to take out the previous demand, right? And we just have to find such a setup. Then what is important, once we know where is the original base, we have to see at some point move back towards this supply, right? That's where eventually short might be initiated. And theoretically, theoretically, we should see reaction at least towards the most recent low. Now, it's not that easy, 1, 2, 3, because very important thing is how market is back into that supply, right? Is it the straight line, which I don't like? I do not prefer this type of the move. So in that case, if it's a straight line, probably most probably I'm not gonna trade this supply, right? Or market slowly is moving back towards this supply, right? In that case, why is so important to see the slow move back into that supply, right? Because we want to see that on the way move into that supply, we want to see each demand to be consumed. We want to have free way, right? We don't want to be disturbed by the demand over the course of the way to the lower level. What I'm talking about, what I mean by the consumption. All right. So over the course to this supply, right? We have higher high and higher low, right? So by taking out the previous high, right, we are creating here the demand. So I want to see the pullback, right? I want to see the pullback into that. So in that case, I can assume that we took out the orders here. Now, there is another move higher, right? We took out another high. So there is another demand. I want to see consumption. And again, right? Now, with this type of the approach into the supply, the very, very important thing is to consume the latest demand very close to the supply, right? In that case, very often, we are going to see hit retracement into this previous demand, attempt to rally with stop count and rejection at the high based on the smaller time frame. That's what we in details discussed previously. All right, that's what I'm going to try to show you on the chart over the course of the day today. All right, very often it works like this, and very often we are the victims of the stop count, right? Because very often we have in our minds, we have, oh yeah, that was the great entry. Market is moving in my direction. Nice. I'm going to move my stop to my entry, right? And I got a free trade. First thing first, I'm going to explain again today. There is no such a thing like a free trade. There is no such a thing like a free trade. And usually, this retracement is consuming the latest demand. We have attempt to go higher, and usually our stops at the break even at +1 are taken out, right? Then market is going our way, but without us. Business as usual, right? Business as usual. And in that case, with this slow approach, right? If we are trying to short here, the stop, my usual stop from the intraday perspective, we are talking about the intraday perspective right now, is gonna be the high of the base +1 plus spread for the short side, right? So we can assume that based on the spreads we have here in the Light Forex platform, yeah, we can, for euro dollar, we can make the round number 2, right, above the top of that zone. All right, and based on this approach into the base, my first target is this low. Okay. Any questions? I'm going to add some management rules, but our third meeting next week is gonna be related to the management. But anyway, I'm going to take into the consideration this short over here. If the distance between the entry and the stop, which is always 1R, right? So if I'm going to risk 1R and the possible target, I'm not saying that it's always black or white, is minimum 3R. Of course, it's not that I'm gonna to wait always for 3R. Sometimes we'll have to actively manage the positions. Sometimes it's gonna be more than 3R. So again, it's not black and white, okay? But I have to have a base to think about what I wanna do. So that's my base. If I have a possibility to try to get 3R or more, then I will consider this as a good one. And of course, the way how the market will get back into that supply will determine if that's the second part of my plan, if I want to be in the market or I don't want to be in the market, right? So that's the basic setup for Riley based drop. Okay. Now, opposite is gonna be drop based Riley. So market decided to go lower. Then market is taking the breath. And some guys saying, oh, come on, that was the wrong direction. We have to go higher, right? So we have a drop. We have a base. And we do have the Riley. Now, what is important for me, that this Riley has to take out the latest supply, right? We are going to discuss the details when this particular supply might work out as a demand at the very beginning, but we are going to go through this later on, right? So I want to see this Riley to taking out the previous supply, right? And during that process, I just need to find on the chart such a thing, right? Then I will go through the process how we are going to get back into that zone, right? What's the level in relation to higher time frame, where we are, and stuff like this, right? So in that case, here the first phase we just have to recognize. Then we are waiting for the pullback. And again, same way as in the previous example. If it's gonna be sharp, strong move back here, I'm not sure I wanna buy here, right? I'm not sure I wanna buy here. Maybe after some stop count, that's what we are going to discuss as well, all right? I do prefer to see slow move back into that demand, right? on the way into that demand, I want to see that each supply on the way to the downside being consumed over the course of that move to the downside, right? Okay. Again, same way. In that case, in case of demand, my stop is just 1 pip below. No spread, nothing like this, right? Spread is related to the short side. Here is just 1 pip below, based on intraday trading, right? Of course, that's my personal setups. You have to, if you want to use it, you have to adopt your own rules, all right? Maybe you are gonna to feel much more comfortable with 2, 3, or 5 pips below the zone, right? But then don't forget, when you are counting, if there is a, so if your distance between entry and stop is gonna be 1 R, and with all the pips you are gonna to add is gonna be 14, right? Then the minimum move to the upside, and you have to check if it's a real, right? If you have on the left side on the chart, if you have some possible supply earlier, because if you do have, then you may want to skip. But if in that case you want to see if you have a space for 42 pips move, right? Because we might have 9 pips zone, all right? But you are comfortable with additional 5 pips, right? So in that case, you have to take total, not only the white of the zone. You have to add also what you are adding, how low below the zone you want to have your stop, right? So for now, we discuss Riley base drop, drop base Riley. First 2 setups. And for me, these 2 are very, very useful, much more useful than the next 2 we are going to discuss. But that's my feeling, right? You may find out that the next 2 are gonna be much more useful for you. So whatever we are going to discuss today, then you have to take some time to test it and adopt only things working for you. That's the most important thing. It's not a system you can, I don't know how to say it, you can blindly follow, right? It's not that it's a stochastic crossing the line and you are automatically taking the position. No, it's not such a thing. It might be, all right, that we are going to watch the same instrument. Let's say all of us, we can watch euro dollar. We might watch this euro dollar on different time frames, and we might trade different possible supply or possible demand zones. And even more, it might end up that you were trading on 5 minutes short side and you were good. I've been trading 1 hour demand, I've been good. Or totally opposite. We might be both wrong, right? You may try to trade supply from the smaller time frame. I might try to trade demand from the higher time frame, and both we are going to be stopped out. Especially with current market conditions, it's yeah, it's very possible with what is going on right now on the market, right? So again, we will go through the charts. We will try to build the plan based on today's market move during the second part of the meeting today. We are going through the basic stuff we discussed last week, right? But because of the technical problems we had, I have to go through it again. So the next setup, and we are going to discuss both at the same time. They are quite easy. It's the drop, it's a base, and the drop, so continuation, right? But we are not trying to take the advantage of the first breakdown, like the breakout traders, breakdown traders, right? I want to see drop, base, drop, and then where market is trying to turn around, I'm going to wait in that middle zone. And theoretically, we should see continuation to the downside, right? Same things going on here. Riley, base, Riley. Again, I'm not taking the advantage of the breakout. I'm waiting patiently for the pullback. And again, the same rules. The way how we are going to make that pullback, if it's going to be straight line or if it's going to be slow move, right? I do prefer these slow moves instead of the sharp pullbacks. But we might have pullbacks or rallies into the zone, sharp one, based on some market comments, news, and that's a little bit different story, right? That's a little bit different story when market is trying to take the advantage of such events. And we will try to discuss it as well. Okay. So smoothly, we went through all 4 basic setups related to possible supply, possible demand. Do you have questions? And by the way, guys, I'm just watching the chat inside the webinar room. So if you are asking questions on the YouTube, I'm sorry, I can't see them. Please log in to webinar room and ask your questions here inside. All right, we do have a question. If it's if the setup needs to be on the daily. Now the most important thing is right. This possible supply, possible demand zones, they are working on each time frame. All right. Now, if I'm going to check the daily chart, and if I have some kind of the possible supply there, and we are approaching them, right? As an intraday trader, I will switch to 1 hour chart and try to work out with the possible supply demand based on the smaller time frame, having in mind having in mind that we are approaching some levels from the higher time frame, right? So I will try to take the advantage of it, meaning, let me try to draw for you. All right, and let's get back one level higher. Let's imagine that this is possible demand on daily. All right? So I'm going to switch to 1 hour chart, and let's say we are somewhere here, and we are approaching this demand from the higher time frame. I'm going to switch to 1 hour chart from the intraday trading perspective. All right? I'm going to switch to 1 hour chart to check where we are. I'm going to switch to 15-minute chart to check where we are, but my execution, and just, I'm going to have to say that my execution is on 5 minutes or 1 minute charts, but it doesn't mean that I'm doing the analysis on the 1 minute. My execution is based on the smaller possible time frame. For me, from my perspective, from intraday perspective, to have the minimal distance between the entry and the stop, right? Now, of course, you can try to trade if it's a daily and you don't have a possibility to watch the charts non-stop, right? You don't have a possibility. Of course, that you can take the advantage of this daily possible demand, all right? And you can try to trade based on the daily, or maybe you can switch to 4 hour or 1 hour for your execution. Okay, we are going to discuss the details on the charts. I'm going to show you the way I would prepare myself for today, for example, right? The thing is that trying to trade on the daily, this supply and demand, first thing first, very often, the distance between entry and distance between stop is gonna be quite wide, right? It very often might be 50 plus pips, right? So in that case, if we want to trade 3R, we have to look for something around 150 pips plus, right? And taking into the consideration current euro-dollar market condition, it might be very, very challenging to try to find it. And especially even if we are going to find this setup, based on what happened lately, market is moving 150 to the upside, 170 to the downside. It might be that for me it would be too wide, right? Okay, I'm going to use the opportunity because we briefly went through the basic stuff. So I'm waiting for eventually for more questions, and I'm gonna to use the time right now to mention about our meetings this week, because it's a very interesting week, right? Plenty of central banks ahead. So tomorrow, and I'm talking about the Light Forex Global YouTube channel this time. I'm not talking about the webinar room. Our next meeting inside the webinar room is going to take place next week, next Tuesday. We are going to have a third webinar related to the possible supply and demand, right? But tomorrow, we have at 8 a.m. CET, pre-London Open, live market coverage as usual, right? Then we have UK CPI, and we are going to cover it live tomorrow as well. We start 15 minutes ahead of the event. So from my perspective, it's 10:15 CET. Then tomorrow, we don't have usual New York Open live market coverage. We are going to cover FOMC live tomorrow. So it's a little bit different. And we are going to meet 15 minutes ahead of the event. So for me, it's 7:45 CET, PM CET. On Thursday, usual pre-London Open at 8 a.m. CET. And Thursday, we don't have usual meeting because of the Bank of England. We start 1:45 PM CET, and we are going to cover Bank of England live. Okay, thank you. Thank you. Thank you very much. So we are good with the details here. Okay, so we can slowly switch to the charts, and we will try to go through the basic stuff. All right, so we are going to analyze some majors. So we are going to have a possibility to check the basic we discussed with the reality right now. All right, with the reality. So let's start with euro dollar, especially that we do have FOMC meeting tomorrow. So let's try to go very deep with the analysis into the euro dollar. All right, especially that the upcoming 2 weeks are gonna be very busy overall. What I mean by that, don't forget, we are approaching end of the second quarter. So we are almost done with the first 6 months of the year. So for sure, there are gonna be some rebalances within the portfolio managers, right? So we might see a little bit bigger moves, a little bit higher volatility, and it might not be related to what we have on the chart as well, right? But that's a little bit different story. Anyway, in that case, let's start with euro dollar. And actually, you know what? I'm going to totally clean the euro dollar chart. And we will start full step-by-step euro dollar analysis based on the monthly chart. So first thing first, and if I'm going to put the line or the box, and you are not necessarily will understand what is going on, so feel free to ask, right? Why the particular line is here from my perspective, okay? So let's have a look what we have based on this latest price action from the monthly chart, right? Now we are start with some additions, right? In this particular move over here, in this particular move here, here, and here, right, from the monthly chart, what happened? We can treat it as a Riley base Riley, right? We can treat it as a Riley base Riley. Why? Because this initial Riley, this one over here, this Riley here, right? What happened here? We took out the latest supply. Where was the latest supply? The latest supply was here. This particular white candle. It was September 2016. September 2016. Why it was supply? All right. Why, in my opinion, it was supply? We need to switch to red color because we are on a monthly. So be on the track. I will try to explain as easiest way as possible, all right? The easiest possible way. So why I do think it was the supply. First thing first, the next month we closed below, so we can assume it was some kind of the short accumulation. But overall, the most important thing here is that from here, we made new low over here, right? So we took out these lows. Even if there was a shadow, we took out the low. So on that rally to the upside, we took out this supply, right? So we had a rally, we had a base, and we had a rally. So first thing first, what we can place here, we can highlight this demand, right? So we had a rally, we had a base, rally. So it was good and smart to wait for a pullback, right? Now, when we are talking about the possible demand, there are many different schools, many different, let's call them educators. So everyone is going to have a little bit different approach, most probably. But in case, if we are talking about the possible demand, right, based on what we've seen on the October 2017, all right, again, we are on a monthly chart. We are doing